Imagine waking up, checking your phone, and seeing money deposited in your account while you slept. This isn't a fantasy, it's the reality of cash flow investing. Instead of trading time for money, your assets work for you, day and night. This guide will show you how to start building wealth and freedom today. Living paycheck to paycheck is exhausting, but there's a way out. By building multiple income streams like rental properties, dividends, or a small business, you can create financial stability and freedom. Regular people do this every day. In this series, we'll show you how to break the cycle and take control of your future. So, what is the ultimate objective here? Is it just about having a bit of extra spending money each month? While that's a nice perk, the true goal is far more profound. It's about achieving genuine financial freedom. This is a state where your passive income from your cash flow investments is greater than your living expenses. When you reach this point, work becomes a choice, not a necessity. You are no longer dependent on a job to survive. You have unlocked the ultimate level of financial security where your assets are fully funding your lifestyle, and you have complete control over your most valuable resource, your time. This essay will serve as your invitation to embark on this journey. We will explore the practical, step-by-step process of how ordinary individuals can leverage cash flow investments to build this kind of life. It's not about some abstract theory, it's about concrete actions you can take. We will dissect the different types of cash-flowing assets from the classic rental property to the more modern peer-to-peer lending platforms. We will look at the pros and cons of each, helping you decide which path aligns best with your goals, risk tolerance, and starting capital. This is your personal guide to building a wealth-generating machine. Think of it this way: every dollar you invest in a cash-flowing asset is like hiring a tiny employee that works for you 24/7, never complains, and never asks for a day off. Your job is to become the CEO of your own financial life, strategically hiring more and more of these money employees until their collective effort is enough to support you entirely. This isn't a passive process of just hoping for the best. It requires learning, planning, and taking calculated risks. But the payoff is a level of autonomy and peace of mind that a traditional career path can rarely offer. The principles we are about to discuss have the power to fundamentally alter your financial trajectory. We invite you to read with an open mind, to ask questions, and to challenge the conventional wisdom you've been taught about money. The strategies you'll learn are not secrets reserved for an exclusive club of investors. They are accessible tools waiting for you to pick them up and use them. The journey to financial freedom doesn't require a winning lottery ticket, just the right knowledge and the courage to start. Let's begin building your future, one cash flow stream at a time. Cash flow is simple. If more money comes in from your investment than goes out, you have positive cash flow. Subtract your expenses from your income. What's left is your profit. This applies to rental properties, vending machines, dividend stocks, almost any investment. Mastering this basic equation moves you from a passive spectator to an active participant in your financial life. Every investment falls into one of two categories: positive or negative cash flow. Positive cash flow means your investment pays you each month, building wealth and stability. Negative cash flow drains your resources, adding stress and risk. Focus on investments that put money in your pocket, not ones that take it out. Positive cash flow is your ticket to sustainable wealth. In investing, both cash flow and appreciation matter, but only one pays the bills. Cash flow is the steady income you receive now, like rent or dividends. Appreciation is your assets' value growing over time. Relying only on appreciation is risky. Cash flow provides stability and pays your bills today. Appreciation is the icing, but cash flow is the cake. Section 1. The speculator's gamble versus the investor's certainty. Speculators bet on future appreciation, hoping someone will pay more later. Investors focus on cash flow, steady, predictable income from day one. It's the difference between anxiously waiting for a windfall and confidently collecting returns. Are you gambling or are you building lasting wealth? Imagine two people preparing for retirement. Amy built a pile of gold, assets that look impressive, but she must sell them to live. Chris built a financial fortress, assets that generate steady income, protecting him from market swings. Cash flow is the ultimate defense, creating stability and letting you live and invest on your own terms. Relying on pure appreciation means, well, surrendering control. You are a passenger on a financial roller coaster, operated by unseen forces like Federal Reserve policies, global events, and the irrational whims of market sentiment. You can do all the research in the world, but ultimately, the price of your asset tomorrow is determined by what millions of other people are willing to pay for it. This lack of control is a significant source of stress and risk for many investors. You are essentially hoping that the world will agree with your assessment of an asset's value when it comes time for you to sell. It's a passive stance that leaves your financial fate in the hands of others. Cash flow investing, however, puts you back in the driver's seat. You have a significant degree of control over the performance of your investment. With a rental property, for example, you control the asset directly. You can screen for high-quality tenants to ensure rent is paid on time. You can make strategic improvements to the property to increase its rental value and attract better occupants. You can diligently manage your expenses, shopping for better insurance rates or handling minor repairs yourself to maximize your net income. You're not just a passive owner, you are an active operator. This control extends to your overall strategy. Because cash flow provides you with a steady, predictable income, you gain immense flexibility. You are never forced to sell an asset at a bad time. If the real estate market is in a slump, you don't have to worry. You can simply hold on to your property, continue collecting your monthly rent checks, and wait for market conditions to improve before you even consider selling. This patience is a superpower in investing. It allows you to make decisions from a position of strength, not desperation, ensuring you only sell when the terms are most favorable to you. Ultimately, this control is what enables you to scale your wealth faster and more safely. The cash flow from your first investment isn't just for paying bills, it becomes the seed money for your next acquisition. You can choose to save up your rental income for a few years to make a down payment on another property, effectively using your asset to buy you more assets. This creates a powerful compounding effect, a wealth snowball that you actively manage and direct. You're no longer just hoping for growth, you are systematically building it, one predictable, controllable cash flow stream at a time. Rental real estate is the classic example of cash flow investing. You buy a property, rent it out, and after expenses, the leftover is your profit. It offers monthly cash flow, appreciation, loan paydown, and tax benefits, a powerful way to build wealth. While it requires work, from finding the right property to managing tenants, real estate remains a proven path to financial independence. If managing tenants isn't for you, dividend-paying stocks offer a hands-off way to earn cash flow. Buy shares in established companies and you'll receive regular dividend payments. Cash you can spend or reinvest. Think blue-chip companies in essentials, utilities, and telecom. For easy diversification, consider a dividend-focused ETF. One investment, many companies, steady income. Want the benefits of owning big real estate without millions or landlord headaches? Enter REITs, companies that own, operate, or finance income-producing properties. Buy a share, and you pool money with others to own a portfolio of real estate. REITs pay out most profits as dividends, and you can buy or sell shares instantly. For those with a slightly higher appetite for risk and a desire for potentially higher returns, a fascinating cash flow opportunity has emerged in the last decade: peer-to-peer, or P2P lending. In essence, P2P lending platforms cut out the traditional middleman, the bank, and allow you to lend your money directly to other individuals or small businesses. In return for taking on the risk that the borrower might not pay you back, you receive regular interest payments, which can generate a strong and steady stream of cash flow. You effectively become the bank, earning profits from the interest charged on loans. The process is managed through online platforms like Prosper or Lending Club. These platforms act as matchmakers. Borrowers apply for loans for various reasons, such as consolidating credit card debt, funding a home improvement project, or starting a small business. The platform then assesses their credit worthiness and assigns them a risk grade. As an investor, you can browse these loan listings, review the borrower's profile and credit data, and decide how much you want to lend. You can invest as little as $25 in a single loan, which allows you to build a highly diversified portfolio of hundreds of different small loans. The cash flow from P2P lending comes in the form of monthly payments from the borrowers. Each payment includes a portion of the principal you lent out plus the interest you've earned. This creates a consistent monthly income stream that you can either withdraw or, more powerfully, reinvest into new loans to compound your returns. The interest rates you can earn are often significantly higher than what you could get from a savings account or a government bond, reflecting the higher risk you are taking. A well-diversified portfolio of P2P loans can potentially generate annual returns in the mid to high single digits or even higher. The primary risk, of course, is default. This is when a borrower stops making payments and you lose the remaining principal on that loan. This is an unavoidable part of P2P lending, which is why diversification is not just a suggestion, it's an absolute necessity. By spreading your investment across hundreds or even thousands of tiny loan pieces, the impact of any single default on your overall portfolio becomes minimal. While it's a more active and riskier form of cash flow investing than buying a dividend ETF, for those who do their homework and build a well-diversified portfolio, P2P lending can be a rewarding way to generate high monthly income. Owning a business offers the highest control and the greatest cash flow potential. It's the path that's created more millionaires than any other. Whether you start small, buy a franchise, or systemize your own company, a well-run business can become a true cash-flowing asset, generating profits and freedom for years to come. Found a promising investment? Before you get excited, calculate the net cash flow, your true profit after every expense. Add up all income, then subtract every expense: mortgage, taxes, insurance, repairs, vacancies, and management fees. If your net cash flow is positive, you're on the right track. If not, reconsider. Numbers don't lie. You've got positive net cash flow, great. But is your return actually good for the cash you invested? Enter cash-on-cash return. Your annual net cash flow divided by your total cash invested, down payment, closing costs, repairs, everything out of pocket. Example, invest $60,000, earn $7, 200 year, $7,200, $60,000, equals 12% cash-on-cash return. This metric lets you compare deals, apples to apples, across different investments. Most savvy investors look for at least 8–12%. If a deal doesn't hit that, reconsider. Cash-on-cash return shows how hard your money is working. Don't settle for less. Use it to filter out mediocre deals and focus on investments that truly grow your wealth. Cash-on-cash return is personal, but cap rate shows a property's raw earning power. No loans, just pure numbers. Cap rate equals net operating income NOI, property value. NOI is income minus operating expenses, not including mortgage. Example, $18,000. NOI on a $300,000 property equal 6% cap rate. Cap rate helps you spot under or overpriced properties fast. Higher cap rate equals higher risk, higher potential return. Lower cap rate equals safer, but less cash flow. Know your market's average cap rate to instantly spot deals. It's the universal language for comparing real estate investments. The payback period asks, how long until you get your initial investment back? Formula: total cash invested, annual net cash flow, equals years to recoup. Example, $60,000 invested, $7 200-year cash flow = 8.3 years. Shorter payback = less risk, faster recycling of your capital. It's a gut check. Would you wait 8 years? 20? The shorter, the better. Use payback period to compare deals with similar returns. Faster payback usually wins. Always know when you'll be playing with house money. Beware deals promising sky-high returns. If it sounds too good to be true, it probably is. High returns almost always mean high hidden risk. Ask what's the catch. Sustainable wealth comes from steady, boring returns. Think 8-12%, not 30% guaranteed. Don't chase lottery tickets. Focus on deals that survive stress tests, not just look flashy. Always dig deeper than the headline number. Protect your capital first. The best investors get excited by stability, not hype. Avoid get-rich-quick traps. Build wealth that lasts. Underestimating expenses is the fastest way to kill your cash flow. Always budget for the 4 horsemen. Vacancy, repairs, capex, and management. Vacancy, plan for at least 5% of rent lost each year. Repairs, set aside 5-10% for ongoing fixes. Capex, save another 5-10% for big-ticket items like roofs and HVAC. Management, even if you DIY, budget 8-10% for your time or a manager. These can eat up 25-40% of your income. Ignore them and you're in trouble. If your deal still cash flows after all this, you've found a winner. Leverage can boost your returns, but it also amplifies risk. Over-leveraging leaves you vulnerable to even small setbacks, while failing to keep cash reserves turns minor issues into disasters. Always keep enough reserves for emergencies. This is your safety net. Smart investors balance growth with protection, so they can weather any storm and stay in the game. Once you receive your first rent check or dividend, you've proven the concept. Your asset is working for you. The temptation is to spend it, but the real power comes from using that income to fund your next investment. This is the start of the cash flow snowball effect. Think of your first investment as a small snowball at the top of a hill. Reinvest your profits and soon your first stream will fund the next. This is how you scale. As your assets grow, the process accelerates. What once took years now takes months. Your side hustle becomes a real business, and each new asset strengthens your financial fortress. The ultimate milestone? When your passive income surpasses your living expenses, true financial independence. Now, you get to choose how you spend your days. That's the freedom you're building, one cash flow at a time. Most of us are taught to save, not build. The old script says, work hard, save a little, and hope it's enough. But real wealth comes from shifting to a builder mindset, using your money to create income-producing assets. Don't just play defense. Become the architect of your financial future and build a system that works for you, not just someday but starting now. The real reason most people pursue wealth isn't luxury, it's time. Time is the only resource you can't get more of. Cash flow investing lets you buy back your time so you can live life on your terms with freedom and control. Your journey to financial freedom starts now. You've learned the power of cash flow, the importance of mindset, and how to analyze deals like a pro. The tools and map are in your hands. The only thing left is to take that first step. Decide to begin. Your future self will thank you. Feeling overwhelmed is normal, but action is the antidote. Your challenge: build your first cash flow stream in the next 90 days. Start small, open a brokerage account, research real estate, try P2P lending, or outline a side business. The size doesn't matter. What matters is breaking inertia and proving to yourself you can do it. Start now, and momentum will follow. As we close, I want to leave you with one final, crucial thought. The path to wealth through cash flow investing is not about working harder. It's about working smarter. The traditional world tells you that to earn more, you must work more hours, take on more responsibility, and climb a corporate ladder that someone else built. This is a recipe for burnout, a life where you trade ever-increasing amounts of your precious time for incremental gains in income. It's a game with a built-in cap, because there are only 24 hours in a day. You eventually run out of time to sell. This is the hamster wheel. Cash flow investing offers you a way off that wheel. It's about fundamentally changing the equation. Instead of trading your time for money, you learn to trade your money for more time. You use your capital to acquire assets, and those assets then work for you, generating income completely independent of your labor. This is the ultimate leverage. It allows your wealth to grow exponentially, unbound by the hours you are physically able to work. It's a shift from being a cog in the machine to becoming the owner of the machine itself. This is how true, sustainable, and life-changing wealth is built. The journey you are about to embark on will require effort, discipline, and continuous learning. There will be challenges and moments of doubt. But every step you take, every asset you acquire, moves you closer to a life of autonomy and choice. You are building something magnificent. A financial legacy that can provide for you, your family, and even for generations to come. You are building a life where your days are your own, where your passions can take center stage, and where financial stress becomes a distant memory. This is not a fantasy, it is the direct result of applying the principles we've discussed. So go out there and start building. Take that first step. Embrace the mindset of an investor, an owner, a creator of your own destiny. Remember the challenge: one stream in 90 days. Start small, think big, and never forget the ultimate goal is not just to be rich, but to be free. Thank you for joining me on this journey. Now it's time to start your own. Make your money start working for you, so one day you don't have to. The power to change your life is in your hands.